We do have some breaking news that we'd like to tell you about right now. CNBC has learned exclusive details about a deal in which Warren Buffett's Berkshire Hathaway was outbid. Late Wednesday, Tech Data Corp said that it had agreed to be bought by private equity firm Apollo Global for $145 a share. That would value the company at about $5.14 billion, excluding debt. The deal was sweetened from Apollo's previous bid of $130 a share after an unnamed suitor topped the original offer. That suitor was none other than Berkshire Hathaway. Buffett told me that 1 week ago he bid $140 a share, or just over $5 billion, excluding debt. Apollo's offer was accepted. The later offer was accepted by Tech Data as the better offer, and Buffett says that at this point he does not intend to make a higher offer. Just a little bit about Tech Data. It's a global distributor of technology products and services. It supplies small companies with technology software and hardware that's made by larger companies, larger technology companies. They are a middleman. But this is evidence of what's been happening with Berkshire Hathaway as its cash hoard has grown. It's topped over $128 billion, according to the most recent SEC filings from the company. This move is also a pretty interesting pivot for Buffett. He rarely goes up against private equity companies and doesn't like to get into bidding wars. But it shows how he is going further afield to try and look to deploy his large stash of cash that he has on hand. Andrew, he's known as being kind of a cheap guy, somebody who looks at prices.
And he doesn't like to negotiate. He doesn't like auctions.
He doesn't like auctions, doesn't like to get into the fray. But what's interesting about this are some of the behind-the-scenes details on this. Bank of America brought the deal to him. There was a go shop provision that was in part of this. So Bank of America brought it to him, and they, in very rapid succession, kind of went to work and put an offer on the table in a matter of days. So it just shows that there are different ways of coming at this.
I'm just surprised a $5 billion deal would even, I mean, it's like pocket lint.
Well, you got $128 billion. You got to figure out what to do with it. But yes, it's not one of the bigger deals, but it does show you a little bit about where they're going and how they're going further afield. Mike Santoli is going to join us right now on the Squawk Newsline to talk a little bit more on this. Mike, what do you think?
Becky, hi. It strikes me as, just in terms of the nature of the business that Tech Data represents, it's, its distribution, it's kind of wide exposure to the U.S. economy, global economy, which I'm sure it's not a top-down strategy by Buffett to kind of buy these types of businesses, but they seem to check off a lot of the boxes. Obviously, huge example of that is the railroads, but then power transmission. So just that idea of relatively steady and pretty good businesses. It seems like that business could also get consolidated a little more that Tech Data is in. But then, also, I guess, price discipline. He had the ability to pay up, probably not in the habit of trying to go toe-to-toe with private equity to squeeze out maximum dollar for the sellers. But, that also shows that it wasn't, kind of worth any price. It wasn't going to be a trophy business. It wasn't going to move the needle that much financially. And so, there's a number you're willing to go for, but not more.
Yeah, and that, too. I mean, just the idea that he's known as somebody who won't pay top dollar for things, got in, saw something that he thought maybe he could offer a fairer bid for. He says he will not make a second bid on this, and that shows you some of his price discipline.
I'm just so surprised that he would even be involved in a go shop because of this issue, right?
Well, Bank of America actually brought it to Todd Combs. Right. Within a day, Buffett had evaluated it, looked at it, and realized that he would be willing to bid up to $140 over the $130 that Apollo had originally bid. Greg Abel, vice chairman at Berkshire, went down and flew down to Clearwater, Florida on Friday. They found out about the deal on Tuesday. On Wednesday, Buffett had evaluated it. By Friday, Greg Abel was down at Clearwater, Florida at the headquarters speaking with Tech Data. And by Saturday, they made a firm offer of $140 a share. So it shows you how quickly they put it together. By the way, in order to speed things along, they simply took Apollo's contract that it already had written, sweetened to some of the terms on it, raised the price, sweetened some of the terms for Tech Data, and kind of threw it back together. So they didn't even bring any law firms in on that.
But was the view that somehow Apollo wouldn't come back?
No, I don't know. I don't think they were massively surprised to see Apollo come back, but if Apollo had bowed out, they would have taken it at that bid and thought that it was a good way to put money to work. But interesting just to see these coming through. But yeah, he's never really gotten involved in some of these things before. But I think you're looking for more avenues, because what Buffett has told us in recent days, Mike, or in recent months and years, I should even say, is that he thinks market valuations for buying entire companies have gotten out of hand. And a lot of it is because there's so much liquidity. The markets are flush with cash. It's harder and harder to buy a company outright, which is why he's been deploying more of their cash towards buying shares of a company like Apple.
Oh, absolutely. And I mean, I think that definitely is a piece of this right now. I mean, even the fact that, private equity is probably done less in terms of acquisition volume than you would expect. So even private equity is saying that there's not enough to buy. So if it can't hit their thresholds for valuation, I definitely think that Berkshire is not going to necessarily see there to be that many ripe opportunities valuation-wise. And obviously one thing that Berkshire has always benefited from, and at least that's been the story, is that being the preferred buyer, right? I mean, so you have certain companies that say, it's almost kind of this mark of honor to have Buffett want to own your business. And if you don't have that, if you're just simply going for the highest takeout price, look, the junk bond markets are right there to finance a lot right now. So I do think it makes it a struggle at this point in the cycle.
That's why this is so surprising to me. Because it's just so antithetical to his whole sort of approach. He wants to be the preferred buyer. This is somebody who sold themselves to somebody else. Somebody else was the preferred buyer, and then they put a go shop on the, by default. This is like an automatic auction.
So I should mention that Tech Data's board, when he came in with the higher offer, immediately voted. Sure. On Sunday night, they had already approved that offer. Right. So it gave 3 days to Apollo to come back and match or raise or beat that offer. So that's kind of what happened with it. We were just looking at the board showing some of Tech Data's biggest customers. It's a supplier that resells products that come from other big technology companies, as we mentioned. About 16% of its sales actually come from Apple products, and products from Cisco and Hewlett-Packard Enterprise make up about 11% each. So it's also an interesting company, Tech Data is, just from the perspective is it could be a little bit of a bellwether for the broader technology industry. You could see whose sales are increasing and whose are coming down to kind of tell you what the hot products are, which is interesting, too. It'd be, as somebody who's a large Apple shareholder,
and a large buyer of all these products, too, in terms of his multiple companies that actually use the services.
That's true.